Are you aware of what mortgage insurance is and how it applies to you when seeking a home loan to purchase a property? Hi, I'm Richard Jeffries from Newbridge Financial Services, and in this really short video we're just going to cover what mortgage insurance is so that you're better prepared when purchasing property. It's really important to remember that mortgage insurance actually covers the bank. It protects the lender in case something goes wrong with the loan. It doesn't protect the borrower in any circumstances. However, it is a cost that the borrower has to pay. And it's what mortgage insurance is it's insurance a bank takes out when they're lending to a borrower with usually less than a 20% deposit. So if we look at an example, if you're looking to purchase a property for $500,000, the bank would assume usually that that's the price, but also the value of the property. What they want to establish is what are they lending in comparison to the value of the property as a percentage. So in this instance, if the bank's lending $400,000, property is $500,000, and the borrower is contributing $100,000 as a deposit, they would look at that as a percentage and establish, okay, they're lending 80% of the value. They'll then look at that on a scale to establish where each borrower sits as a percentage of what they're borrowing. If the borrower is borrowing less than 80%, the bank won't need to take out mortgage insurance in most cases because they consider that loan to be less risky and mortgage insurance not needed. However, if the borrower is taking out more than 80% as a loan, in other words, their deposit is less than 20%, the bank will usually take out mortgage insurance in those cases. That's then a cost that the borrower needs to pay. It can often be added to the loan, and it works on a scale so that the less deposit or the more that someone is borrowing as a percentage, the higher the cost of mortgage insurance. It's also worked out as a percentage on the loan amount that the borrower is seeking approval for. So the higher the loan, the more they're borrowing as a percentage, the higher the mortgage insurance will be. If you'd like to arrange pre-approval or establish what your borrowing power is, please visit our website. I'm Richard Jeffries and we look forward to working with you.